Hello and welcome to today's webinar, What You Need to Know About Sales Tax. My name is Jerisa and I'll be your moderator today. I am here from the Early Growth team. I have two things I want to share with you, just two quick notes. The webinar will last approximately 40 minutes, give or take. There will be time for Q&A. So please feel free to type your questions into the control panel and we will get those answered for you. Also, there will be a recording available to you in 48 hours. So you will receive a link to this webinar. You can also find it on our YouTube channel for Early Growth Financial Services. So today we have two amazing tax experts to go over this topic today. We have Bridget from Avalara and Anjum from Early Growth. I'm gonna let them take over right now just to tell you a little bit about what they do, and then we'll begin our webinar. So Bridget, why don't we start with you?
Great, thanks so much, and thanks for having me today. Excited to be here. I'm Bridget Merton, and I have been at Avalara for 4 years, helping excellent partners like Early Growth educate their clients on sales tax compliance. So really excited to be here to, I think everyone's very excited to learn about sales tax. I know I get excited about it, but not a lot of other people. But we're going to make this fun, and you're going to learn a lot and some fun facts, maybe for some even happy hour conversations. So happy to be here. I've been in the technology field for over 15 years, so love automating people's businesses and just giving people back time in their lives, right, to do other things than all of these tactical manual processes. Anjum, I'm going to toss it to you.
Thanks, Bridget. Thanks, Jerisa. It's a pleasure to be here as well. Like Jerisa mentioned, my name is Anjum Tanoli. I head the tax department here at Early Growth. I'm a CPA with about 15 years of experience. And over the past 15 years, I've worked with numerous startups and mid-sized businesses on all things tax. Here at Early Growth specifically, we work with approximately 900 startups on all their finance, tax, and accounting needs. So really looking forward to today's webinar, and we hope that you find this information useful.
Awesome. Alrighty, here we go. Sorry about that, guys. I was actually talking, didn't realize I was still on mute.
Okay, good. I was like, I can't hear you. Is it my internet? Okay.
Our agenda for today is we'll talk about economic nexus, Avalara solutions, and then we'll go over Q&A. And Bridget, I'll let you take it from here.
Great, thanks. So if you haven't heard of Avalara, we've actually been around helping people with sales tax compliance for 14 years. We went public last year, which is really exciting. So we are listed on the New York Stock Exchange. We have over 20,000 active customers with actually over 700 pre-built integrations. And I think what's important about this is so many businesses sell in so many different ways now, right? You sell online, you might have a store, Some people still do have catalogs and doing phone orders. So because of this, we can integrate that sales tax calculation the whole way through. Some of our integrations are Shopify, NetSuite, QuickBooks, all the way up to Oracle and Workday. So chances are, if you've heard of the ERP accounting system or e-commerce cart, we integrate with it. And if not, we have an API tool that you can build out your own integration if you have a custom shopping cart or a custom accounting system. A 98% customer retention rate. Avalara processes over 5 billion sales tax transactions per year, and an astonishing amount over the holiday period on Cyber Monday as well. We manage over 25 million exemption certificates, and there are over $18 billion in taxes remitted per year. So definitely the industry leader in sales tax compliance, and we'd love to help you as well. Next slide.
Next slide is a little bit about Early Growth Financial Services. If you're not familiar with us, we offer on-demand part-time CFO services as well as tax services. So we are really a great company for those early stage companies who are not ready to fully commit to a CFO, but they want that experience and expertise to be on their team. So if you want any more information, please find us at earlygrowthfinancialservices.com. And here we go.
Well, great. Well, here is the fun part, economic nexus. So really quick, let's just kind of review how we've gotten to this economic nexus point. If you think about your buying behavior, and if you think about, if you're old enough, how you bought something 30 years ago versus how you might buy something today, I'm sure that's dramatically different, right? Or if you think about how your parents or maybe grandparents used to buy things. Obviously, people were going into stores 30 years ago to make purchases, maybe catalog purchases as well, but, no one really was buying things online. And let's flash forward to today where, I ask this all the time in live presentations, and you can think about this in your own life. How many of you have gone into a mall, this month to make a purchase? And then if you think about it, how many of you have probably purchased something on Amazon today, this month, this week? Obviously, more and more people are buying things online, and if it's not Amazon, maybe Target online. You can even order something on Target and then drive up and they'll bring it to your car. Really different ways to buy things. So because of this change in buying patterns, the states were losing over $13 billion a year from uncollected taxes on these e-commerce sales. And because of this, the sales and gross receipts of taxes make up 47% of the state's revenue. So really, the states were losing a lot of money, and they were looking to a Supreme Court case to, kind of make up for this money and make up for these losses. And that's how we got to economic nexus. Anjum, did you have any other notes on that, on buying behaviors? I'm sure you've seen that in your own world.
We certainly have, and I think the key takeaway here, Bridget, for the folks on the webinar is that sales tax is becoming a lot more relevant even for early stage startups. And state governments are hungry for that sales tax revenue, and we expect to see increased audits and compliance efforts across the U.S. when it comes to sales tax. So this is a really timely topic and something that you really want to pay attention to even early on.
Great. Thanks for that insight. So what is South Dakota versus Wayfair all about? So for you non-sales tax geeks out there, you may have never even heard of South Dakota versus Wayfair. So I'm going to take a step back from this and just briefly give an overview of how sales tax was collected prior to this, going back to my buying conversation. So up until June of last year, really businesses had to collect and remit sales tax based on physical presence. And the easiest definition of this is, right, if you had a store in a state, I'm in California, so if I have a store in California, I have to file and remit sales tax here. If I have a store in California and I never go anywhere else and I ship things all over the United States, you know, pre this ruling, I did not have to file for the most part or collect sales tax there. So that was the physical presence, which is a little easier to understand. But because of this $13 billion loss for the states started bending the rules of what physical presence meant. And they started adding in, you know, varying definitions. Like if you had your product in warehouses, which this hit Amazon, right? If you were shipping your product via fulfillment by Amazon, you had physical presence Nexus in about 23 states, wherever Amazon had an warehouse. Or if you had 1099 employees in those states, that counted as physical presence. So all of these different laws kind of built up into this South Dakota Wayfair case last year. And what happened last year in this case is the Supreme Court ruled in favor of South Dakota and added economic nexus to the factors that had, so physical nexus is still there. Now as a company, you also need to look at economic nexus as well. So this just added it to these physical presence that we touched on. So this doesn't change what is tax exempt, doesn't change product taxability, and it also applies to manufacturers and wholesalers who sell direct. And you can go to the next slide. So just to review again what economic nexus is, it's the obligation for the seller to file, get registered, file, and remit based on their economic activity. And, you know, the standing rule for this in South Dakota was $100,000 or 200 transactions into that state. So now if I'm in California and I'm selling into South Dakota and I've hit either $100,000 or 200 transactions, even if I'm selling something that's $1, 200 of those items into South Dakota, I now have to get registered and file and collect sales tax. So this really was earth-shattering, right? Like the hugest thing to happen to sales tax in 30 years. I know people, I was presenting, you know, we're talking about this. I could see people falling asleep. I'm like, no, you don't understand. This is huge, huge Supreme Court rule change. So if you haven't heard about this, you know, you need to read up on it. We have tons of resources on our website and a really helpful chart that we'll get into that you can help use to determine if you do have economic nexus. Anjum, do you have anything to add to this economic nexus case? I know we've talked about it and we're both it was really earth-shattering.
It was a huge court case, the Wayfair Supreme Court case, and I think the key takeaway there is, you know, that's a federal court ruling, and sales tax is a state-level law. So each state has their own laws around sales tax, and post-Wayfair, it's a lot easier to trigger nexus in a state, and therefore trigger additional sales tax reporting requirements. So it's a huge issue in the sales tax world, which obviously affects a lot of companies. So it's really something that as a company you need to be aware of and make sure your company is in compliance in all the states.
Yep, absolutely. And so getting back to this grid, I have a snippet of the map that we have out on our website out there. And if you're out on the web for Avalara, you just would go to Avalara and resources, and then there's South Dakota v. Wayfair or Economic Nexus. You can click on those links, and this will show you a state-by-state Nexus guide that I think is just really helpful to see where your business stands. Also, you know, as I was talking before, these physical presence items didn't go away. So there's affiliate nexus, there's click-through nexus, cookie nexus. Like if you were in a certain state and you downloaded an app with a cookie that drops that cookie onto your phone or your computer, you know, you possibly could have nexus there. There's also marketplace laws. So, you know, this economic nexus just adds another layer of complexity in the whole world of sales tax. I think another item to note that's very important is 18 states in orange below report on more than just taxable sales. So they look at non-exempt and taxable sales. So if you're a wholesaler or doing a lot of B2B sales, this is something for you to notice. The rule is if you are selling into these states, and even if you're a B2B seller or you're not, what you're selling is not taxable, and you hit the economic nexus, you need to make sure you have your exemption certificates in order, and really you need to register and file 0 returns. So just important to note that as well. Next slide. So when it comes to tax compliance, Nexus, even though there's a lot to it, is just the tip of the iceberg. And we're going to get into the other layers of sales tax compliance following this slide. So there's also product taxability that you have to think about, where this is what I think is just so interesting and so many fun facts in the whole world of product taxability. There's the jurisdiction assignment. Most people think of sales tax in terms of zip codes, and this is just not correct. As I mentioned before, handling the exemption certificates. And then, of course, the main part of it all to, get registered, prep, and filing those returns and have all that information ready when the auditor comes. I think an interesting thing to note, I work with many, many people in the state and local tax world, and all of these CPAs and industry experts have been saying, so the Supreme Court ruling was about a little over a year ago. And so now we probably have 2 more years to get compliant, right? But in that 3rd year after that ruling, that's really when the auditors are going to come in heavy-handed, because for them, they'll have 3 years of sales for businesses to come after, right? The auditors want to make the biggest bang per audit, so they're not going to come in and audit a company after it's just been a year. They really want to make sure they have that data, and then they can get 3 years worth of penalties versus that. So this is a key time for your business to get compliant. Next slide. Okay, product taxability. This is by far my most favorite part to talk about, just because I think it's so interesting, all the product taxability things that are out there. So let's take an example in Texas. This varies, all product taxability varies state by state. So donuts in Texas, if you have less than 5 donuts, it's taxable. But if you have more, they're exempt. And this same rule applies in Arizona and California. So the reason for this, I always thought it's Texas, they just want you eating more donuts. But really, if you have less than 5 donuts, they think you're going to eat those donuts there. And so in Texas, Arizona, California, and probably some other states, if you get your food to eat there, like at a McDonald's or Panera Bread, then they charge sales tax. But if you get your food to go, then you're not charged sales tax. So this could also save you as a consumer some money. If you're eating in a fast food place and you get your food to go, you wouldn't have to pay sales tax on it there. Candy bars in Indiana, I think this one is really fascinating. Snickers are taxable, but a Kit Kat is exempt. And the reason for this is that a Kit Kat and a Twix have a cookie in it and therefore are considered food. And food is not taxable in Indiana, but the candy Snickers is. One more quick example is bagels in New York. If you slice a bagel, it's taxable, but if you don't, it's exempt. And the reason for this is slicing that bagel puts a service on that bagel, and services are taxable. So these are just a few of the thousands and thousands of product taxability examples. And you might be thinking, like, why does this exist? And this really gets down to what Anjem said, how this is even though it's a federal law, the states have their own interpretation of the law. And when a new service comes out, like Netflix, or, they decide to all of a sudden start taxing water, it's a way for those states to increase revenue where people might not notice, right? If they just flat out raised your whole sales tax rate, people would be really mad, and that would be on the news and in the radio and your newspaper, and I can't believe they're taxing us more. I live in California. My God, how many more taxes can I pay? This is crazy. So they'll just start taxing things like Netflix. And, you know, people don't notice as much. So this is one reason for all the product taxability challenges. Anton, did you have anything to add to my trivia slide?
I mean, I think this has been really useful. And as you can see, you know, sales tax can become very complicated very quickly. And I know we've you know, shared a lot of technical information thus far. So just to back up a bit, and I wanted to provide a simple framework that you can view sales tax compliance with. And it's the way I look at sales tax, it's a three-step process. Step one, you need to determine in which states your company has Nexus, which, as we chatted about earlier, it's a lot easier to trigger a Nexus now under the new laws. After you've determined the list of states where you have Nexus, the next step is product taxability, determining whether or not the state you have Nexus in actually applies sales tax to your product or service and what the proper rate is. And as this slide clearly shows, that's not an easy task to undertake. And then the third step is, once you've determined where you have Nexus, where sales tax applies to your product or service, you actually have to register in that state, get a state ID number, and begin collecting and remitting sales tax, along with monthly or quarterly sales tax compliance filings. So that's an easy way to remember or think about sales tax. Is it's a simple three-step process. Determine Nexus, determine whether or not your product is taxable in a state, and the third and final step, register and begin collecting and remitting sales tax. So I think that's the proper framework to view sales tax issues.
Thanks. Yeah, thanks for that. I think it's always good to break it down into the easier steps to get a handle of it. It can be really daunting. So getting into some more daunting information of the complexity of sales tax, you also need to think about the jurisdiction assignment challenge. There's over 12,000 sales tax jurisdictions in the United States. And for this reason, you know, a lot of systems just use a zip code to calculate sales tax, but this is not correct. If we advance the slide, we can see that the boundaries may overlap, especially in Colorado. If you're in Colorado or Louisiana, these are some of the most complicated sales tax states. You can see in this zip code of 80111, there's, let's count them, 1, 2, 3 different sales tax rates. And the boundaries don't even seem to make sense, right? You can see the green, but for some reason, there's a little bit of orange in that green. And the boundaries definitely overlap. So it's really important to get down to that exact address when you're calculating a sales tax rate. You can go to the next slide. The exemption certificate challenge, we talked about this with the new change with economic nexus being on all sales in about 18 states now. When businesses that have to collect exemption certificates are going out and getting these, sometimes, you know, it might be the salesperson that's out there getting it and the accounting person is the one that needs it for audit. So a lot of times employees find it difficult to collect and to store these, and those employees getting them aren't properly trained on what to look for. And missing one single certificate during an audit costs much more than just calculating the incorrect rate. So if you do need to collect exemption certificates, you know, make sure you have this process in order. Next slide. Our James from Northern Tool just thinks these exemption certificates are as important as cash money. So oops, I think the slides are going on its own. I can't talk that fast. I think if we can just go back a couple of slides. I was on the filing slide. Almost there. So exemption certificates, as I was saying, James, he looks at those as cash money. And then the next step in this is the state and local tax prep and filing. There's many things that go into filing the returns every month or every quarter. And this takes even small businesses about 40 hours a month. So one person's time for a full week a month is spent dealing with your state and local tax prep and filing. And this is because they have to manage the filing calendar. If you're using multiple systems, you have to get all that information into one system, respond to state notices, make sure if you're moving into a different location that you have the right tax rate. And this is just taking a lot of time to do something that you're probably not even doing correctly. And if you're filing in one state, it might be manageable, but if you now with Economic Nexus are filing in 10 or more states, this just becomes so burdensome, where automation is really key. Next slide. And then, of course, be ready at the time of audit. You need a system that can have when the auditor's there, you need easy access to that information. So I have a quick story about one of our customers who owned a coffee shop, and an auditor was there, auditing the coffee shop. And he was there for quite a while, and so he started talking to the employees. He went up to one of the baristas and noticed they were drinking a cup of coffee and said, "Oh, hey, do you like the coffee here?" And the employee's like, "Yeah, I love working here. The coffee's great, and I actually get a free cup of coffee every shift I work." And the auditor said to that barista, "Oh, wow, that's awesome. Are you paying use tax on that coffee?" And of course, she responded, "Use tax? Why would I pay use tax on it? It's free." Well, right there, the auditor nailed that coffee store on all the free samples they were giving out, because as a company, you have to pay use tax on free samples. This happened to me when I was buying a cell phone. I thought I got a free cell phone a couple years ago, and then you notice you're paying like $80 in sales tax. So it's like, what? I thought this thing was free. Why am I paying sales tax? So you have to look for things like that. And I think the story from the coffee shop is, if you have your data easy to access and nice reports and make it easier for them, hopefully the auditor will not be there as long. I mean, Anjum, do you have any other audit stories or thing to mention there?
I do. And just to back up a bit in terms of the actual sales tax compliance filings, 100% agree, Bridget, that, post Wayfair, companies are going to have to file in multiple states for sales tax purposes. Early on, if you're filing in one or two states, maybe you can get away with some sort of manual process for preparing and filing those sales tax returns. But as your company grows and scales and you go from filing in one state to 10, 15, 20 states, really important to have an automated solution in place to ensure everything is handled properly and filed timely. And in terms of the audits, one area where we see startups have a misstep in sales tax is not taking it seriously, especially in the beginning. But a lot of companies aspire to grow, scale, and potentially become an M&A target or even go IPO in the future. And when that day comes, the purchasing company is going to do a lot of due diligence before making the acquisition. A heavy focus of that due diligence is sales tax. So we have seen cases whereby early on, a company isn't focused on sales tax. That's uncovered during a due diligence phase of an M&A deal. And that could jeopardize the M&A deal if you have some sales tax exposure, or at a minimum, you're going to take a haircut on the purchase price for any sales tax exposure. So in addition to audit risk, there's also M&A risk with non-compliance when it comes to sales tax.
Yeah, absolutely. You don't want that to stand in the way of your next move. Next slide. Yeah, so from all of this complexity, you can really see why companies outsource sales tax. We have a study here from Aberdeen Research where 75% of businesses felt like an auditor is likely to find mistakes. And when I presented this last year to a CPA conference, people were like, oh my God, I think it's more than over 90% of businesses probably aren't doing the sales tax 100% correctly. So this is a great reason to outsource something. If it's something that's taking a ton of your time and you can't do correctly, you should outsource that. And, you know, there's always human error and a human doing thing. Why don't we, you know, take out that human error to get this done right and save everyone time as well. Next slide. And as you can imagine, or if you've been through one, sales tax audits are not fun. You know, I'm sure that customer or coffee shop did not enjoy that audit that they were part of. And 56% of companies have found that the cost of an average sales tax audit is over $50,000. And this is in time, expense, back taxes, and penalties they might have to pay. So, you know, not fun and not cost effective. Next slide. So why now? Why should you be thinking about sales tax early on in your company? You know, as Anjum mentioned, really with this mergers and M&A and acquisitions, you know, this is just something that you have to have checked off a list to make sure you're in compliance. Right now, because of that $13 billion in uncollected sales tax revenue from e-commerce, the states are really looking closer at this. And really, economic nexus, this Supreme Court ruling that came out last year, is having a huge impact on businesses. And that's really why businesses are looking at economic nexus right now. So other things to look for as your business grows and expands, if you're adding in new geographies or maybe you're adding in a new product line, you know, we had someone call us recently. They had been selling B2B in the past, and then they decided, you know, we're going to have a new product and we're going to sell this direct to the consumer. And so that changed their business and really changed their sales tax profile. Maybe a company is implementing a new ERP. Maybe you're going from, you know, doing everything manual to moving into QuickBooks or Xero, or moving on up from QuickBooks to NetSuite or Sage, right? This is a great time to look at your sales tax compliance strategy and how an add-on solution to those can help. We talked about mergers and acquisitions or fundraising. If you have a new hired financial executive come in, I know a lot of times with a new CFO taking over, they'll review all the processes in place. And if you've been through a sales tax audit, you know, many of those companies are always looking for automation. Anjum, do you have anything to add about these growth triggers before we learn more about Avalara's solutions?
Yeah, I think this is a really great slide. And, you know, what I would add is, you know, you're going to have to make an investment upfront in terms of getting compliant with sales tax, but it's not a one-time project where you take a look at it, you go through the process and all is well. That's certainly the first step, but, you know, as your company scales and grows and picks up customers in additional states, your economic nexus is going to expand as well. Your sales tax obligations are going to continually change. So this is an ongoing obligation that needs to get looked at, if not once a quarter, at least once a year, to make sure that, you know, as your company's footprint expands, that you're remaining in compliance with sales tax. So it's an ongoing project for the company, and another reason that, you know, looking to outsource that is probably your best solution as the company grows and scales.
Great points. Yeah, a lot of times people will come to us, we'll do a Nexus study, and, you know, or they've had a Nexus study done in the past by someone else, and an auditor will come in and, you know, say they weren't in compliance, and it's because maybe those rules have changed, right? So if you did something 5 years ago, you know, you need to look at it again because the rules are ever changing. So let's learn a little bit more about how Avalara can help automate your sales tax compliance. Hop into the next slide. So we talked about all of these items that go into creating that sales tax rate. So there's Nexus. So with Avalara, say you're in California and you're using Avalara, and then all of a sudden you're expanding into 5 more states. You can easily go into the Avalara console and just turn on those states by just flipping over a button, right? You get registered, and then you can turn on Avalara very quickly and start calculating sales tax for those new areas where you've been registered. For the product taxability, this is what I think is really exciting. Avalara has over 100 people that all they do is research the rules and rates of product taxability. I always think these people must just kill it at Jeopardy, right? They know so much about product taxability. And that information is updated every month. So if there's changes to product taxability, there's usually a big change in January and one in July, but states, can change it whenever they'd like. So we have all those rules up to date, so you don't have to worry about that. The jurisdiction assignment, Avalara calculates sales tax based on the exact address on the ship to and shipped from address on the invoice. So we get down to that exact address, and if there isn't an address, let's say maybe there's work on a farm or in an oil field, we can also calculate the sales tax rate by lat long as well. Number 4, exemption certificates. We can automate that whole process. And state and local tax prep and filing, we automate all the filing as well. For the filing, the information, the calculation is created in AvaTax and sends that information to the Avalara returns console, where the returns are automatically filed and payment remitted every month if you're filing monthly or quarterly or annually, however often you're filing. And so Avalara takes one lump sum out from the business, and then we send it out to all the states. So if you have someone that's doing this manually now, maybe that person can never go on vacation that week when they're doing the state tax prep and filing, and they're just tied to their desk. So now this whole process is automated, similar to payroll. You just don't have to worry about it anymore. And then, of course, for audit readiness, you can easily access all that information and share, some of that information with the auditors to send them on their way. Next slide. So just to review again how the solution works, AvaTax is this tax calculation engine. And so this is an add-on to an ERP, e-commerce, POS, or a billing system, or your e-commerce cart. And so in those carts, there's usually a native sales tax calculation, right? A lot of times it could be a zip code rate that's in there or some other type of tax engine. So AvaTax takes that over and then calculates the sales tax rate based on the product taxability and then the address on the invoice. And then it looks at all the product taxability information as well. And that all happens behind the scenes in a millisecond to get that correct rate. Then that information goes to the returns console. And we also have a separate information solution called Cert Capture. It's our exemption certificate management solution. This can be sold standalone or with AvaTax and Avalara returns as well. So for our product, standalone, you can purchase AvaTax if you just want to do the calculations and with us and still file the returns yourself, you're welcome to do that. Or if you just have a big exemption certificate problem, you can automate that with us. Most people buy AvaTax, the calculations piece and the returns together. And as I mentioned before, the calculation is done in AvaTax. That information is sent over to the returns console where the returns are automatically filed and payment remitted. So it just automates that whole process, very similar to how you would outsource your payroll. Next slide. So new for AvaTax this year is Economic Nexus notification. And this will notify you, let's say you're just selling in California, but you just started your business and you're in California and you launch it and you start selling into all the states and your business is booming. It'll notify you, hey, we see that in Alabama, their threshold is $250,000 in sales. And you now are at 88% of that threshold. And your sales are $222,000. So you should probably look at getting registered there. And once you hit that threshold, then you'll be ready to start filing and collecting sales tax. So this is, a lot of our customers have loved this new functionality. Next slide. So going beyond our core products of our sales tax solutions, we also have a tax advisory piece of our business. And included in this is Avalara licensing. So with this, companies, when they're moving into these new states, you do need to get registered to start collecting sales tax. So and you can just buy this standalone as well. We can get you registered in the states, and certain states you also have to have a business license, and our solution will do that too. So this is really affordable. It's $199 per registration, and if you need a business license with that in that state, it would be $349 for that business license and the sales tax registration. Feel free to contact me after this if you need more information on that. And this can be purchased, again, standalone. And this includes all the state fees as well. Next slide. So just to mention, we also have a tax advisory piece of our business. And so if you don't know where you have Nexus, or if you possibly had Nexus in the past and you just didn't know, like, whoa, I was selling fulfillment by Amazon and I had no idea that gave me physical Nexus in 23 states. We have a tax advisory department that can help you out. We can do Nexus studies as well as voluntary disclosures. Like, let's say you know that you were using Amazon, you can do a voluntary disclosure with that state. So a few other services that you can get from Avalara. But that about wraps it up. Let's see, I see one question in here. And this says, I'm going to just read this off. How do we transmit customer address data and transaction data to Avalara and Avatax? So it happens at the point of invoice that we look at the address and the transaction, right? So it all happens in that magic moment when the sale is happening. And yes, we 100% integrate with Stripe. We have thousands of Stripe customers. And I think I went over the returns process. And the process does not change. So it's the same process with high volume, low ticket as it would be with low volume, high ticket. It's the same process, and it's all behind the scenes and happens very quickly as part of the invoice that you don't even really notice it's happening. I hope that answered your question. Are there any other questions out there? Give it a minute. Anjum, did you have anything else to add? Oh, I think we have one more floating in. Let's see, one said, do we have to offer tax exemption to customers who are tax exempt? Or they can file on their own to get a refund? So your customer is tax exempt. I think if they're exempt, they would need to know that and let you know. I can send you some information on this after the webinar as well. We have another question about a free trial. We do have free trials for certain products. So check out our website. You can type in your integration, or feel free, you could follow up with me after to let me know, or your early growth representative know what accounting or ERP system you're on, and I can let you know if we have a free trial. But we do have those for some of our products. Any other questions? Yeah, well, great. Well, thanks for having me, Early Growth. I love partnering with you. You've been an excellent partner, and it's been great to meet so many of you throughout the year. And I appreciate all your clients listening to this information on sales tax. We're happy to partner with you and happy to help you out to make sure you get your sales tax compliance done right.
Thank you so much, Bridget. That was so amazing. Anjum, did you want to add anything?
I think it was fantastic as well. We shared a lot of good information. I can certainly understand how some of it can be a bit confusing. So I believe we're going to share these slides after the webinar. Our contact information is listed. So if you have any questions at all about anything sales tax, please feel free to reach out. We'd be happy to chat with you.
Awesome. Well, thank you both. And everyone, again, this will be available in 48 hours. You'll get a link if you are registered today. You can also find this webinar on our Early Growth Financial Services YouTube page. Thank you again, and hope to see you for the next one.
Thanks, everyone. Thanks, Anjum. Bye.
Take care.